This is John Ray. I'm here today with Lee Bounds. Lee is a preferred lender that I've worked with several years, and we just wanted to get together and have a little bit of chat about what's going on in the market in real estate and in the mortgage industry. Lee, first of all, tell me, how did you get into the mortgage industry?
Hey, John. Well, thank you for having me on the call, first of all. Wow, it's been a while. I've been in the mortgage business since 2002, and I actually got into the market. I was actually training. I was getting my real estate license and studying to take the test and become one of you. But I've been in the people business and sales business for, golly, I hate to say it, but about 35, 40 years. With my background in motorsports and finance and insurance departments, that kind of thing. So it kind of is a good combination, people and financing and all kind of fell in my lap when a friend of mine in 2003 said, "Hey, while you're studying for your test, why don't you come help me out? We're busier than we can be." In 2003, anybody could get a loan in 2003, 2004, 2005. And I'll lead us up to that in a minute. But I said, sure, while I'm studying, that sounds great. I'll get some experience with the mortgage industry as well. And so I did. I joined a small real estate mortgage broker, and had no idea what I was doing, to be honest with you. It was just kind of, but hey, I went to work for Regions Bank and a year or so after that, and got a lot of great training and have stuck with it ever since then. And I've seen, the ups, the downs of the markets. I've experienced the 2008s and 9s and 10, and actually did, really, really well during those times because I think it all boils down to having a servant's heart and helping people. And that's just where I am with this. And I've stuck with it. I've been successful. And yeah, so that's kind of how I got here, where I am today.
Well, good. I didn't realize that you had an automotive background similar to what I did. I ran the wholesale automobile auction for 25 plus years. And then when we sold that, I decided, what can I do? And I just landed. I thought I'd help people buy their second most expensive item in their life, being a vehicle. And I thought, why not try to help them buy their most expensive? So that's what I did, the same thing, both of us being in automotive, and here we are in the real estate mortgage industry. So that's good.
Right. Mine was a little different. It was motorsports, not automotive, and motorcycles, four-wheelers, watercraft, things like that. So, but all the same.
All the same. Yep, that's true. Well, one of the questions that I'm getting, and I know the answer that I tell people when I'm working with them, buyers, they're always asking me right now, should I buy a home with today's interest rates being high? Now, I know what I tell them, but I want to get it from an expert on the mortgage side. What would you tell somebody in that situation?
Well, John, we're seeing, mortgage rates that have doubled. I'm just being quite honest about this. And what I compare this to 2008, 2009, and there was a housing bubble, and everybody continues to say there's a housing bubble. There's going to be a housing bubble. No, that's not true. The difference today is lending standards are much tighter. There are no subprime loans. That means that, hey, you can get a loan and just state your income, state your assets. It's just not like that. Also, there's not a overabundance of homes on the market, and you know that as well as I do, being your side of it. So the supply down mortgage lending is tighter than what it was. I would just have to say that with supplies being so low, what I'm seeing in our market is that home prices continue. Even though it's slowed down, they continue to stay very stable in that the pricing, they're not giving them away. They're not dropping just simply because of the supply demand deal. What I would say is, man, if you find your home and you can afford it, buy it. don't marry the interest rate, marry the home and be satisfied with that. You've been looking, standing on the sidelines possibly. And again, if you find a home, yes, jump on it. You may have opportunity right now where the seller may offer some concessions, and we'll talk about that again in a minute. But yes, I would encourage you to buy. Home prices are going to continue to rise.
Yep. One of the things that I've been telling people is, and I think you're saying the same thing, is if you find a home that you love and you can afford it, go on and buy it. Because there's one thing that's certain in this industry, that rates are going to go up and rates are going to go down.
Absolutely.
And if you wait, you can always refinance if you buy now. Right. But if you wait too long, that home might be more expensive next time due to the appreciation, because we have homes appreciate regularly. They very seldom depreciate. So that's the same thing I tell with my buyers that I'm working with that are concerned about interest rates. Well,
yeah, I was just reading something, not to cut in on you, but reading something this morning about the market appreciation, and I see it all the time. You know, your average market appreciation depends on what the markets are like, but they don't expect the appreciation to go down. They expect it, even in a slower economy that we've got, recession, whatever, that the appreciation is going to go anywhere between 5 to 7%. And again, different markets are different, but hey, 5 to 7% of wealth. You have a home that provides more wealth to your family. Yeah, it's a great investment. It's a great tool.
It's a good investment for the protection of your wealth going forward. Yep,
yes.
You're right. Yep. Well, the next thing that I've had people ask about, and I'm studying this, and this is more things from the seller perspective. I was talking to a couple of agents over the last couple of weeks, and we had been discussing, interest rates are up. They are high. We're still below the 50-year average. But what can sellers do to help buyers? And there was a thing that they used to do back before I got into the mortgage, because rates have been low back before I got into the real estate business. Rates were low this whole time. But back in the late 80s, early 70s, there was a thing called buy downs. Explain that. What is a buy down?
Yeah, it's sounds like it is what it says it is. It's a buy down. So let's just say that your seller has got a home that is in a soft market and it's $400,000. That's the market price on it. And they're a little concerned, hey, my home's been on the market for over 30 days. That's just not normal. Well, that is actually normal. I mean, and I think you'll agree with me that most homes, if you're selling, you need to be prepared for it to take 30 to 90 days to get a contract.
Absolutely.
I think that's normal time. It's not like it was 6 months or a year ago when it was on the market for an hour, 2 hours. Even if it hit the market and people didn't know about it, it was sold. So so what this, instead of it just sitting there, or discounting the home and giving anything like that away as far as value goes, the seller can opt in on the seller buy down, and they pay a percentage, basically a discount point for the borrower or buyer. And let's just say your rate today is 6.5%. They can, on a $400,000 home, and I figured it up, it was like $6,800 to pay for the buyer to have a cheaper rate for the first year of 2% lower than what current market is. So let's just say 4.5% for the first year, and then the second year 5.5%. And then the third year and on through the next 28 years, it would be 6.5%. It's a fixed product. So don't think there's an ARM, adjustable rate mortgage, or anything tricky like that involved. No, it's simply just a seller concession. And I tell you, it has really been working in our market because the buyers are more attracted to a lower monthly payment. I mean, bottom line is it fits my budget. Yes. And we know markets are very cyclical. Again, I've been doing this for almost 20 years. And so I've seen the rates go up. I've seen them come down, and they will come back down. I always use that phrase, whatever goes up must come down, and they will. Predictions are maybe in the spring next year, we'll see some trends down. Who knows? But again, the buy down is a great option for sellers. If they've got a home that's sitting there and they're nervous, they've got a home that's under construction, they need to get a contract in, it's getting close to the final phases of completing that new home, or they found a home that they really, really love. They want to go put an offer in on. This is a great way to entice or to help a buyer to make sense of purchasing a home. So every price is a little different depending on what the rates are that day as far as what the cost is, but it's a great option. It really is.
And that's very key, because one of the things that as a real estate agent, when we're talking to sellers, we tell them that they've got to look at their house and to behold it in the way that the buyer looks at it. And if you can make it more attractive for the buyer by helping him get a lower payment, that is going to help him drastically, because all these buyers are comparing homes, and that's something most people aren't doing. Yeah. So that might be something I need to talk to you a little bit more about and learn more about it myself.
Absolutely. It's pretty simple. Again, the rate depends daily. Rates change daily. So it would depend on the fee. But yeah, I take one at a time. Just, each home is a different case, and that way I can come up with the exact figures. So yeah.
Good deal.
Great option.
Tell me, you had mentioned something that had happened really big in the mortgage industry, interest rate wise, here lately. Tell me more about that.
All the sentiment, look, inflation drives the mortgage rates up and down. When there's news of inflation, man, the investors get pretty antsy. It's riskier. They're making less money on their investments, which mortgages are nothing more than a mortgage-backed security. They sell off to the markets to investors, and they want a higher rate of return on the money. With lately, the past week or so, we got some news, and I've seen it come out, that the inflation is kind of tapering off. And so we've seen a difference in the mortgage market as far as a 30-year fixed rate goes, which was just over 7% 2 weeks ago. This week it's 6.53% on a 30-year fixed rate. So almost a half point swing just because of that news. And so how long will it last? It may not last for a week, but hey, take advantage of it. If you've got someone that's looking at a home, or anybody out there that's looking for a home and you've been waiting to see if rates are going to drop, call your realtor and say, hey, let's put a contract in on that house. So you can lock the rate in. That's the key. And let me explain that. When you're just looking and you've been pre-approved for a loan with your mortgage provider, mortgage lender, just because they've pre-approved you does not mean that your rate is locked. Your rate cannot be locked actually until we get a contract in hand. So what was yesterday is not going to always be today, is what I'm saying. And then they can change throughout the day. So that's very important to know.
Yep, I know that's one thing that I do every day is check and see what the current rates are. So absolutely, it does change daily.
Changes, yep.
Yep. Well, anything else that you've got that you own that you need to get out there to the public so that they know what's going on in the mortgage world?
Well, I just think that it's still a great time to buy a home right now. Again, with the market like it is, if you find that perfect home, or you just are ready to you got someone wanting to buy yours, whatever, man, get pre-qualified. That's the key. And I know it is for you, being a realtor, is making sure you've got a viable candidate that can buy a home, even with rates a little bit higher. And that's something I like to discuss with them, is to go over the numbers, make sure they're comfortable, they know where they're going to be. And we know every in and out just about that we can before they go and make a contract or write an offer and get an accepted contract on it. Getting pre-approved. Something that we did just about a week ago at New American Funding. Let me explain on a construction loan. Typically, what I've always done, or what most people do, they find a piece of land, John, they want to buy it and they want to build a house on it. Or they find a lot that they love in a neighborhood they love. They want to be there, but there's no home on it. What they typically do is they'll go to the bank and get a construction loan for the first phase or the construction period, which is average 6 to 9 months. And then they come to the bank, to the mortgage company or the bank, whichever they've got, whoever they got the loan with, and they have to create a whole new loan for the permanent mortgage. So there's a construction loan, and then there's the permanent mortgage. Those are two separate loans, two sets of closing costs typically, and two different closings. So what we've rolled out is a one-time construction to perm loan. So it's a construction / 30-year fixed rate mortgage all built into one. We start off from day one purchasing the lot with the cost of the new property or the new construction. We do it just like the bank. We loan depending on the schedules and what's been completed thus far, all the way up until it's complete. And then we roll it into a 30-year or 15-year, whatever your preference is there, fixed rate mortgage. And that's been huge because you eliminate closing costs for two mortgages. Also, within the 90-day window, we can start looking at rates and go ahead and lock a permanent rate down for you. So we just highly encourage. We have more control over that loan, and I just think it's a great product. Less going from one lender to another, bank to the mortgage company, back and forth. I'm in control of your loan from day one to the very end, as far as the lender goes.
That is huge, being able to save that closing cost on that second loan, because that can
Thousands of dollars
money over time.
Thousands
Well, as we wrap up today, tell me, I know people might want to have some questions for you. What is the best way for them to be able to get in touch with you?
Well, you can go to my website. It's NAF Homes /Lee Bounds, or you can reach out to me. My cell phone number is 601-941-7784. Technology is a big thing, John. We've got a phone app. I've got the regular, I'll take your app over the phone, however you want to do it. But most people today are very familiar with the phone application and technology, and it's as simple as that. You just complete the application by phone. So, yeah.
Well, I will put that down in the end of the video. We'll get it taken care of. So,
okay, perfect.
I do appreciate your time today. I can tell you've got the servant's heart. You want to help people when they're trying to find a mortgage, and that's a big step in the process. So that's a good thing to have.
Well, John, we've had a great relationship thus far. I enjoyed working with you. We've made several new families help them getting their new homes, and they're so excited. I'm so grateful to work with you on that. So yeah, I look forward to more.
Okay, we will talk to you later, and you have a good day.
Have a good weekend, John. Take care.
Okay.